16 weeks. 120 days of consistent daily content. Today is the day the July CPI inflation report lands, and it is genuinely the most important single data point for the rest of 2026. Economists expect headline CPI at 3.4% annually and core inflation at 2.5%. This number determines whether the Federal Reserve raises rates in September or holds. It determines whether mortgage rates rise further or begin to ease. It determines whether markets continue their recovery or face renewed pressure. Let me bring together everything that has happened in the 16 weeks since Wealth Sprint launched, because the CPI number today is the culmination of the dominant economic story of this entire period. The story of 2026 in one narrative. The year began with expectations of multiple Federal Reserve rate cuts. Iran conflict drove oil from $73 to near $100 per barrel, reigniting inflation and eliminating rate cut hopes. The Fed held rates 5 consecutive meetings. 3 members voted to raise rates at the last meeting. The economy shed 23,000 jobs in July while inflation stayed well above target. An Iran-Oman peace deal sent oil back to $77, offering the first real hope of inflation easing. Nvidia became a $5.42 trillion company. Shopify proved AI can triple revenues. Meta lost 10% for failing to prove AI returns. The S&P 500 hit all-time highs while the economy lost jobs. Wages rose 4.4%, above inflation, for workers who stayed employed. Today's CPI tells us whether this extraordinary year of financial volatility is moving toward resolution or continuation. A CPI below expectations means the Iran peace deal is already easing inflation. Rate hike fears recede. The remainder of 2026 becomes more financially navigable for borrowers and investors alike. A CPI above expectations means inflation is more entrenched than the peace deal can immediately address. Rate hike probability rises. The financial pressure on households, mortgages, and businesses intensifies further. 16 weeks. Every development connected. Every principle unchanged. Emergency fund. Kill expensive debt. Automate investing. Increase earning capacity. Live below your means. Whatever today's CPI shows, these 5 actions are the complete and correct response. They were on day 1. They are on day 120. They will be on day 1825. The 5-year mark. Keep going.